Imagine this. A stock crashes 40%, just tanks. And then it comes roaring back. Well, that's exactly what happened with Kirloseng Oil Engines, or KOEL. Today, we're going to dig into the why behind this insane roller coaster ride. We'll look at the crash, the crazy rally, the whole shebang. Let's get right into it.
So you're probably asking yourself, what is actually going on here? I mean, how does a stock just plummet almost 40% in 6 months and then turn around and just soar? Is this company actually strong, or is this just, a dead cat bounce before it falls again? Let's break it down. All right, so first things first. Before we get into the stock's wild swings, you got to know who we're even talking about. Who is Kirloseng Oil Engines? What do they actually do? Well, as you'll see, it's a lot more than just making engines. Okay, so when you hear engines, don't think about what's in your car. No. KOEL is on a completely different level. We are talking about massive, powerful engines and generators. I mean, just look at their client list. It's like a who's who of a country's backbone. Nuclear power plants? Yep. Indian Navy warships? Them too. Railways, the data centers that keep our internet running? You get the picture. Their tagline really says it all. This is serious industrial muscle. All right, so if they're this important, this foundational to the country's infrastructure, then why on earth did the stock take such a massive nosedive? That's the big question, right? And that brings us right to the first part of this whole drama, that brutal 40% plunge. Let's just walk through how this whole collapse went down. So picture it. September of last year, the stock is just flying high, hitting a 1,475 rupees. Everything looks great. But then the bad news hits. In Q3, the company comes out and says profits took a major dive. And that one announcement, man, it just spooked everyone. By early this year, the stock had completely crashed, all the way down to 800 rupees. It was a classic case of pure investor panic. And this is where things get really weird for investors, right? It was a total paradox. Because on one hand, their revenue, the amount of money they were bringing in, was actually up, grew by a healthy 29%. They were selling more stuff. But, and it's a big but, their profit dropped by a staggering 31%. And look, when the market sees sales going up, but profits going down, all the alarm bells start ringing. That's a huge red flag, and that's exactly what triggered that massive sell-off. But here's the thing, the story didn't just end there with a crash and burn. Nope. Almost as quickly as it fell, the stock started this incredible, powerful recovery. So what happened? How did they turn the ship around so fast? Well, it really came down to three key things that just poured fuel on this comeback. Okay, this is absolutely the most important part to understand. While the stock price was in a total freefall, the actual business, it was still solid. It wasn't broken. And then, bam, a series of game-changing events happened. First, they land this massive contract with the Indian Navy. That alone sent the stock soaring 6% in one day. Then, they secured this enormous 800 crore rupee order for a nuclear project. These huge wins were like a giant signal to the market, saying, hey, we're still here and we're still strong. And that, of course, led to the third piece of the puzzle, a huge wave of new money pouring in from everyday retail investors. And, that third point, it's really worth zooming in on. Get this. In just 30 days, interest from individual investors more than doubled, a 107% jump. When you get that much fresh cash and that much new excitement flooding into a stock, it's like pouring rocket fuel on a fire. The price just has to go up. The comeback was officially on. Okay, so that pretty much explains all the recent drama, right? The crash, the rally. But look, as an investor, the past is interesting, but the future is where the money's at. And this is where the KOEL story gets really, really ambitious. Let's take a look at what they're planning for the next 5 years. So KOEL has put a massive target out there. They're saying that by 2030, they want to be a 16,700 crore rupee revenue company. To put that in perspective for you, that's almost double where they are right now. That is a huge, bold goal they're aiming for. All right, so the big question is, what could that actually mean for the stock price? Let's just do some quick back-of-the-napkin math here. If, and it's an if, they actually hit that revenue target, their earnings per share, or EPS, could land somewhere in the ballpark of 100 to 127 rupees. Now, if you slap a pretty standard price-to-earnings multiple on that, say 30x, you're looking at a potential target stock price somewhere between 3,000 and 3,800 rupees. So what's the bottom line here? In simple terms, from where the stock is today, at about 1,400 rupees,
That's a potential 2.5 times return on your investment. That's a pretty compelling reason to pay attention, assuming they can actually pull it off. But, and you knew there was a but coming, right? This is a really, really important one. Every investment, and I mean every investment, has risks. So we have to balance that exciting, ambitious future with a big, healthy dose of reality.
Yeah, because let's be real, in the stock market, nothing is ever a guarantee. That super optimistic future we just mapped out, it's a great destination for sure, but the road to get there is going to be bumpy. It's full of uncertainty, and there are a ton of things that could go wrong. It is absolutely not a sure thing.
So here's the reality check. First, those big government and defense orders, they are famous for getting delayed. It just happens. Second, the company's profit has now gone down for 2 quarters in a row. You just can't ignore a trend like that. And finally, let's be totally honest with ourselves. After the stock has run up this much already, the easy money is probably gone. The big quick gains have likely already happened.
Which brings us to the most important point, really. This is not a get-rich-quick stock. Not at all. This is a bet for a patient investor, the kind of person who believes in that long-term vision for 2030 and has the stomach to ride out the bumps that are almost certainly coming.
But hey, let's not be all doom and gloom. I want to leave you with one very, very bullish sign. The promoters. We're talking the insiders, the founding families, the people who know this company inside and out. They haven't sold a single share. Not one. Through all this chaos. And when the people who know the business best are holding on for dear life, that is a huge vote of confidence. So what's next? What should you be watching for? Well, get your calendar out and mark down the Q4 results coming up in May. Here's the magic number. If they report a profit of over 150 crore rupees, that's a huge signal that they're back on track, and it could be just the trigger the stock needs to go and test those old highs again.
So at the end of the day, the KOL story is really one of resilience, isn't it? It feels like that big crash actually created a new, stronger foundation for the stock. The huge orders are real, the long-term plan is clear, but those risks, especially around short-term profits, they're just as real. So the big question I have for you is, after hearing all of this, is KOL a stock that's now on your watch list?